Hey guys, welcome back for our next session. It's an amazing panel discussion with three really amazing people working in the DeFi space. And the panel name is Building DeFi Products. So we have Prateek Jain from Just DeFi, Sami Start, co-founder of Transak, and Jack Hugh, co-founder of Switcheo Network. Before we start on with the panel discussion, I would like to quickly invite Akshay, my co-founder at Blockchain India and Document Studios, to come and give interesting things that you are doing with DeFi and a couple of announcements that you would want to make. So Akshay, are you here? Can you please raise your hand? There you. Hey Akshay.
Hi everyone, can you hear me? Am I audible?
Yes. Yes.
Yeah. So first of all, hi to the panelists. I think these are some of the companies that I've been following, of course, that I've been following for quite a while. Good to see friends here as well. Just quickly, not taking too much time away, quickly introducing myself. I lead initiatives at Blockchain Studios and Blockchain India. Both organizations are working towards furthering blockchain and crypto-based companies, uh, specifically more so in India, right? And we strongly believe in decentralization, and we believe in the idea that it's very important for progress and change. And hence, at Blockchain India, we sort of run a knowledge sharing community that's full of individuals that are early movers in the Web 3.0 and enterprise blockchain space, right? So we have tons of initiatives. Something that I'm really excited about is the 100 days of code that we're running with, a new concept called open apps. So exciting for you guys to check it out. Apart from that, we run a podcast called Society 3.0. Really excited about that as well. We've had Tim Draper come on board. We have the director of technology at World Economic Forum sharing his views around blockchain and other frontier technologies, how they're coming together. Sort of exploring convergence of different technologies and what will be its impact on society as we know it today, right? And again, at Document Studios, we work towards developer education, and we launch startups that are at a very early stage. We co-build with both developers and founders, with whichever projects they're exploring, right? So what they particularly get is definitely our acumen. Some of the developers in the blockchain space, or me as an ecosystem enabler, or generally even our network with companies like Stellar, Algorand, OEN, Draper University, and obviously now Zilliqa. Of course, we worked with Chain Security, Origin Protocol, IBM, Mahindra Group. So all of these guys, but Tezos, Cosmos, when you work with us, these guys we learn from, and all of them enable if there are any synergies with your projects. So yeah, I would love to have you look out Blockchain Studios. Would love to have you all, be a part of Blockchain India as a community. Yeah, thanks for the time. I'll give it back to you, Manav, and looking forward to this panel discussion.
Thank you, Akshay. All right. Handing over the mic to Prateek, who is the moderator for our panel discussion. Over to you, Prateek.
Hey, thank you so much, man. Yeah, great talk, Akshay. So, hey guys, Prateek here, co-founder of Just DeFi. We are basically a decentralized finance community, helping and trying to build the DeFi ecosystem, educating masses about DeFi since quite some time. A little bit background about myself. I've been active in DeFi and blockchain ecosystem from over 4 years now. And then I've been working for DeFi, Asia's largest DeFi platform, Nuo Network, and currently working on our DeFi staking derivatives project, and then just growing Just DeFi. And now, yeah, so we're gonna talk about the most hottest topic in town right now, decentralized finance, the industry which has grown over 10x this year, from over, I guess, $1 billion TVL to over 11 billion now. And yeah, we have Jack from Switcheo, and then Sami from Transak today. So it'll be great if you guys can give a good intro about yourself. Yeah, over to you, Jack.
Yeah, I think I will start first. Yeah, I'm Jack. I'm the co-founder and chief commercial officer at Switcheo. So if you missed the presentation previously, Switcheo is a decentralized exchange. We are built on multiple different blockchains, and we are currently building. We recently launched our own sidechain that deals with order matching in a decentralized manner. So we're currently working with Zilliqa on that Swap platform. Yeah.
Nice. Thank you. Sami?
Great. So hi, I'm Sami. I'm co-founder and CEO of Transak. And Transak is a way for end users to buy or sell cryptocurrency directly to their wallet. So it's different from an exchange like Coinbase, where you deposit your funds and trade on the exchange. With Transak, you send in fiat and you get back crypto straight to your wallet, or you send in crypto and you get back fiat straight to your bank account. And another thing about Transak is we're also a developer integration, which means that it can be integrated into third-party applications. For example, a wallet or a website or any other application can integrate Transak, and they can allow their end users to switch from fiat to crypto. And a bit about myself. So I started off my career in high-frequency trading. I was doing electronic market making on options. So I'm really like a trader at heart. I like price discovery and calculated risks. And then after that, I led a software team at a B2C fintech company in London, and helped to scale up that company to a very large size. And I really learned a lot about kind of some of the problems of onboarding in traditional fintech, not decentralized finance, but just fintech. And during that time, I was also investing in Ethereum and writing some smart contracts and kind of playing around. And really just it became very, very clear that this centralized finance world is here, and it's very, very established. And this decentralized finance world is growing crazy fast. It's getting huge in such a short amount of time. And of course, money needs to be flowing between these two networks. It's a very, very obvious problem, and it's becoming more and more obvious as time goes on. And so that's basically what Transak does. It's just this tool that allows money to flow in between centralized finance and decentralized finance, between pounds, euros, dollars, and stable coins, Ethereum, Zilliqa. Thanks for having me.
Thanks, Sami. Thanks, Jack. So yeah, we're gonna start with our discussion now. So first question is to you, Jack. So how do you explain DeFi to an average user, like who's basically investing in stocks, right? And why? What's in it for them? Why do they basically pay attention to it?
Right. So this is actually something that we've always been talking about ever since the launch of Switcheo, or even back in 2017, where you see the ICO boom and everything, right? So currently it's kind of interesting about how the valuation of all these different governance tokens that governs a lot of these DeFi platforms are actually being valued based on their TVL, or like the returns that they get based on the inflations, which is in essence is kind of like the value to book ratio, and it's also kind of like a way of dividend calculation to value the underlying asset, which is these governance tokens, right? And I think the fundamental difference between DeFi and traditional finance is that DeFi actually allows, or it gives financial inclusion to a lot of people that were previously not was previously not accessible to the individual. Like, for example, money market funds, or like any sorts of these sorts of like loan facilities, like like a really good example is like for Nexus Mutual, like the insurance part of the DeFi ecosystem, which actually insures smart contracts. I think the fundamental difference between that and like traditional insurance is that for traditional insurance, most of the funds actually comes from the company which is underwriting the insurance itself. But for Nexus Mutual, it's kind of like anybody can kind of contribute to the insurance fund and get a yield based on the cover that people pay for these sorts of insurance. I think that's the fundamental difference, like giving access to anybody who are like to be involved in this sort of ecosystem. Yeah. Sami, on to you.
Okay.
Sorry, I actually had a yeah. So next question, very very well explained, Jack. So next question to you is Sami. So as we know, like as you were talking about, we are growing so rapidly, right? TVL has grown from 1 billion to over 10 billion this year, right? So what do you think are the major reasons for such rapid growth? Why do you think we have moved like on February? I think it was around less than $1 billion, and we were still skeptical about when exactly we're gonna see the mass adoption. And now we are growing so much. What do you think is the major reason behind it?
Yeah, so the growth graph of DeFi looks like your dream startup, right? It's like this kind of hockey shaped growth where it's suddenly growing really, really quickly. I think there are two. You can split the reasons into two main areas. So on the one side, you have incentives, like what is the incentive for someone to actually use DeFi, and then on the other hand, you have reducing friction for actually getting in. So let's first talk about incentives. Why do people want to use DeFi? Usually it's to make money, right? People like to make money. That's their number one incentive. They're excited by that. And some of the yields or some of the rates of return you can get on DeFi right now are really, really high. They're almost too high, right? And in some cases, that's because there's an imbalance of supply and demand. So let's go through some of the ways that you can make money on DeFi. One thing is you can pool your money in Uniswap, which is an automatic market maker, and you can earn commissions on trades that happen through that exchange. So in some cases, you can earn really good commissions if you pick the right pool. Another way is you can earn yield on kind of compound or some kind of lending protocol. And if there's an imbalance in supply and demand there, you can earn large amounts. And you can also earn from staking. Like different platforms are incentivizing people to stake, and they can get rewards on that. And some of the platforms right now are almost kind of like a pyramid scheme, right? Like the more people who come in, the more rewards the previous people get, and it creates this mania of like, I need to get in now, and it's like really, really exciting, which is kind of what people need, right? Like people don't want to pay attention if they can earn like an extra 1% a year or something like that. But when you're earning like 2,000% per year, it's like, wow, I need to get in this right now, and I'm going to make this effort to learn about how wallets work and all this crazy stuff. Obviously, that's not sustainable at all, and in some ways, it's quite dangerous. But maybe in some ways, it's also kind of a good thing, right? Because it got people to pay attention. Obviously, it's not good if people are losing large amounts of money. So that's kind of the incentives of why would you want to get in DeFi, and I think that's what's pulling people in. And now let's talk about friction. So I think there's a lot of good work that's being done in, for example, creating wallets and reducing the friction and the user experience that's able to get in there. And once some of those blockers are in, it just unleashes this opportunity to a new section of the population, right? People who previously weren't able to get in because they don't understand like public-private key cryptography, and they're not able to set up all these things. Now you could just download a mobile app, and it's in the hands of a much wider set of the population. So yeah, I would largely bucket the very large growth into those two things, right? Higher incentives for people to get in, and less friction for people to get in.
Nice answer, man. Yeah. So next question to you, Jack, is about, as you are a builder yourself, right? What do you think are the major challenges while building DeFi right now? Like, and what should a developer as a developer, what do you think are the major challenges, and how do we, like, suppose there is a fresh developer who's just getting started with Solidity. So how do they start?
I think a lot of the challenges, it's kind of rivaling the idea of yield in the current space. I think everybody is looking for the highest yield returns, as what Sami mentioned previously. I think the current players in the space is we're all drawn to the high returns in staking, or like yield farming, or any of the sorts of yield generating sorts of platform. Like as Sami mentioned, like the whole Uniswap idea, or like even SushiSwap, where it's kind of like a vampire attack, but they incentivize the users to deposit their LP tokens with them, which can be migrated onto the SushiSwap platform. That they incentivize them so much to deposit these LP tokens by intentionally inflating the supply of sushis in such a way that it's extremely lucrative for anyone to just deposit into the Uniswap pools and then send the LP tokens to SushiSwap, or like just stick with them and retrieve these rewards. I think a lot of the space right now it's a competition in who can give the best yield. I think that's the one thing that any sort of new players in this space should look at, like the current yields that are already given out by more stable platforms. Like for example, on Uniswap, it's a very established platform, and currently for most of the pairs that you want to stick with to get Uni, it's about 40% APR. And then on other trusted platforms such as Flamingo, which it's about double of that. But I think a lot of these yields are generally lower because lower in comparative to more high risk platforms, because of the inherent risk involved and the uncertainty of whether these like newly formed pools will run away. I think that's one of the main concerns of people actually wanting to stick into many of these unknown projects. And you can kind of opt for a safer return on the better known pools like Uniswap or BlockFi or even Compound, as a trade-off for better security. So it's higher return and high risk on the smart contract risk, and also or you can opt for lower return with much lower risk, because the project is much more well known and it's been around for a much longer time. Yeah.
Thank you, man. I completely agree with it. Yeah. So question to you, Sami. So what do you think about DeFi versus CeFi, right? Like we have seen recently, like Uniswap volumes are growing like crazily, right? Even surpassed, I guess, Bitfinex volume and many other big centralized exchanges volume. And especially if we compare it to traditional finance, DeFi is still like literally nothing, right? It's like trillions of dollars. Like, how do we plan to get those people on board? How do we plan to get masses on board, right? And like right now, I feel we have like less than. We do have like over $10 billion of TVL, but we have like less than, I guess, 50K users or 100K users max on top. How do we plan to get masses on board?
Yeah. So I think, for example, right now, if you're buying on a centralized exchange or a decentralized exchange, we have all these issues still, like gas fees, and still it's hard to create a wallet, and still it's hard to understand all these concepts. So yeah, of course, right now, centralized finance is still bigger. It's still, there's still a lot of work to do. I think at some point, we have to get to the stage where we no longer call them blockchain apps, or we no longer call them dApps, right? They're just apps, okay? So blockchain is a back-end technology. It's not something that people need to know about in the front end, right? Like, same thing with artificial intelligence. You don't need to understand artificial intelligence to use it. It just kind of is in your app, like Facebook or whatever, and it just works. So what we need to do is we need to have products where you go on this app and it's phrased to the user in simple terms, like this high interest rate or any other product in DeFi. And in order to get there, we have to solve a number of user experience problems. And and that's on the B2C side. But then there's also the B2B side, right? Like the business to business side. And you know, a lot of financial institutions in this world they're not customer facing. They don't need any kind of user interface. They don't need any kind of user experience. So I think that we need to have obviously really good B2B APIs for how companies can connect into these protocols, right? And I think a lot of the existing companies that you know today, so for example, PayPal or any kind of investing app, they need to have APIs to be able to hook into these applications, these decentralized applications themselves. And I think that kind of magic is going to happen in the back end. And once you get, you know, like imagine you get like a BlackRock and they start using these decentralized applications to start investing money. Like 10 billion for them is nothing, right? That's like pocket change for them. So once you get these companies like you know, BlackRock, Fidelity, you know, really big financial institutions that start having clear avenues to get money in, that's when you start to get the trillions, right? So I think that's going to be the really key thing, and it's also the kind of the boring thing, right? Like no one gets super excited about like enterprise and these kind of things, but yeah, I think that's where the really big money is. So I think, you know, to summarize, there will be that UX B2C need, but then there also needs to be that enterprise friendly thing, and a lot of people in crypto, they're young people like us, right? You know, they're not necessarily involved in that world. So I think we need people to kind of network outside of the bubble and you know, speak to more entrenched centralized finance people, because if you're just staying in the same bubble, that bridge is never going to be crossed.
Yeah, man, I can absolutely agree with you on that. Like we should definitely treat blockchain as a back-end technology, right? Like no one gives a shit about like how exactly Facebook is doing their algorithm or how Tinder is doing their matchmaking. It's all about solving the problem for an end user, right? So maybe sometime in the future we'll be having like simple apps, maybe like Coinbase, where you'll be able to stake your tokens and everything, and you'll be definitely using protocols like Compound or Transak for on ramp, off ramp, right, in the backend. But in the front end, it shouldn't the end user shouldn't care, right? Like they should have is like a very clean UI or UX which they should be using and just solving their problems, right? Yeah. So yeah, next question to you, Jack, is what do you think about like the situation of DeFi right now? Is it a bubble? Is it a loop? Like as you were saying, like new money is continuously getting formed. Like Sushi came, like, and millions of dollars flew into it. Then Uniswap's token came, right? And we can say like basically new value of like over 2 billion has been generated, right, created, and then it's basically like maybe it's a loop, like new money keep on getting created and TVL keep on getting increased. What do you think about it?
Yeah, so this is pretty interesting because I think quite recently we see quite a few friends like they previously were not as interested in crypto as before, but they recently cashed in like quite a substantial amount of money, but not into actually Bitcoin or Ethereum or any of these like popular coins that we're all familiar with. It's actually more towards stable coins, because because with stable coins, it gives you access to many of these yield farming platforms, which is significantly lower risk than holding Bitcoin or Ethereum, right? Because if you're holding any sort of crypto assets other than stable coins, it's more of a speculative nature, hoping that it would move or whatever. But if you're holding stable coins, the inherent risk is still pretty low. It's especially if it's like USDC or one of these centralized stable coins. So So the kind of conversation that has been going on, it's really the amount of money that has actually been flowing from traditional finance, like friends that previously were heavily invested in stocks, stocks, and many of all these types of different financial instruments, because of negative bond yields or extremely cheap interest rates, they choose to borrow money from banks and lend it out on BlockFi or any sorts of these like decentralized finance platforms. I think that's kind of like one of the main reasons of more and more people moving into DeFi, because of the relatively much higher yield as compared to what the traditional finance space has to currently offer. Because with the whole interest rate nearing negative thing, that there's actually a significant arbitrage for people to just borrow money from banks and just throw into these funding pools, basically.
Yeah, but do you think like it's gonna sustain? Do you think we are going to like not maybe 50 billion or 100 billion from here instead of like going down straight away?
Yeah, so actually, I do think that we will actually have. I think we'll go up significantly more, because the TVL locked in DeFi. I mean, apart from the really weird staking platforms and many other different products, but I think fundamentally, like, a lot of these products actually make a lot of sense. Like, for Curve-Fi, if you're staking with Curve-Fi, people are actually genuinely using that platform. In fact, I do use that platform very often, like, to not just to stake my USD, but to actually do stablecoin swaps, because I think that's one of the fundamental use cases of stablecoins. Like, and a lot of these decentralized platforms, like, they don't accept every stablecoin. They accept, like, maybe you don't accept DAI, right? And you need and you have USDC, so you have to swap USDC to DAI, and you want to do it as little slippage as possible. And if you do it through a centralized exchange, it's going to take 0.1% fee. But if you do it through Curve, it's much cheaper. And I think these use cases, it ties directly back with the volume transacted on the platform itself. And I don't think that will go away anytime soon, especially with the opportunities that reside in this space currently. That is based on, first, real actual users and real actual yield that is bringing these users to the space currently.
Yeah. So yeah, another one to you, Sami, now. What do you think are the major problems we have today? Like, is it legalities, or is it like, all these protocols which are not being YAM, just like talking about YAM, right? It was unaudited, and like people was like jammed the whole Ethereum ecosystem, Ethereum network, and then contributed, like, TVL was grown to, I guess, 600 million in less than like 24 hours or something, right? And what do you think about that, and how do we solve those problems?
Like, as in, how do we solve problems with like specifically like YAM or
overall, like most of the protocols are not actually as decentralized as they portray, right? And there are obviously security risks when you interact with these DeFi protocols. And then what as a user, like, how cautious should they be, right? And then how do they choose that this protocol is trusted enough, I can trust my hard-earned money with it, right?
Yeah, I think the answer is that most of the kind of everyday population is not qualified to make that decision. I think that one way is if the project is audited by a well-known company. For example, like if your project is audited by Consensus or something like that, then you can probably say it's likely that this is okay. Another good safety check is if the project has been around for a long period of time and it hasn't blown up, then it's probably okay. I think that if there's also too much hype and there's too much mania, then that's very dangerous. You should think with your brain. You should not think with your greed. So So if something seems too good to be true, is not always too good to be true, right? Like there's the story of the guy who's walking down the street and he sees $100 bill on the ground, and he doesn't pick it up, and they say, oh, why didn't you pick it up? And he says, oh, because it's too good to be true. I'm not going to pick it up. Like sometimes there are these kind of opportunities where you should pick up that $100 bill, but you should do your research, right? Like why is this interest rate so high, right? Because in traditional finance, you usually have the Sharpe ratio, right? The Sharpe ratio says that a rational investor tries to go for the highest returns divided by the standard deviation, divided by the risk of that return. So you want to go for the highest risk-adjusted returns. And is that return so high because you know something that other people don't? Or is that return so high because no one wants to touch that thing because it's like unaudited, or there's some other systematic risk there. So I think that for people who kind of know the space and they understand the space, you can follow these kind of rules to make a decision for yourself. But the truth is, most people should not be making that decision for themselves. So I think they should be accessing these products through a trusted application that can screen them and do this kind of assessment for them, because most people don't understand this stuff.
Yeah, man, I would absolutely agree with you on that part, right? Maybe we need more applications like Argent, like very, very simple wallet, and then integrate much further integrations, right? Yeah. So yeah, another question to you, Jack, is how do we make it economical for an average user to interact with DeFi protocols, right? Like currently, if I try to do yield farming, it costs, I guess, more than $200 or something in gas fees itself, right? And Uniswap again is very costly. And maybe, what do you think is the solution? Maybe layer 2, or maybe bridges like Near, or maybe like moving to other blockchains like Avalanche, Definity. What do you think? What do you think about it?
Yeah, this is actually right up our forte actually. So because we realized that the fees are getting increasingly expensive, especially on Ethereum, and that's something that we like to solve. So that's kind of one of the main reasons why we launched our own sidechain to deal with all these transactions. And I think apart from dealing with the high fees issues, there's also the problem of there's also the added benefit of interoperability. I think there's many projects that are building on different protocols simply to benefit from the lower fees than Ethereum, and to capture all these different value from these different blockchains. There's an interoperability factor involved, and I think that's something that us at Switcheo we really focus a lot on building a sidechain that really connects with all these different blockchains that resides these opportunities basically. Yeah.
So yeah, now we should probably talk a little bit about NFTs again, which is getting hotter, right? A lot of like protocols popping up, like Avigochi, Rarible. Andre is building his own project, and we recently saw that craziness happening overnight, right? And people lost like $15 million, like, which is not good. What do you think about like DeFi plus NFTs? Do you think it's gonna start another bull run or maybe another cycle, right? Because so far NFTs was pretty much high, we can say, but not people were not actually using it, right? Maybe like NFTs were locked up, right? Suppose you say you buy a Ethermon worth 10 Ether, you were not able to use it, right? It was just an exchange of value. What do you think this can kick in now with DeFi?
Is that for me? Oh.
It was for Sami, but yeah, you guys, I think it's a very important question. So maybe we should have both of your perspective on it, right?
I'll give an answer and then Jack, you can better answer. So NFT is a non-fungible token. Non-fungible means it's different from any other token. And this has become quite popular in gaming. So for example, in gaming, an NFT, it kind of acts a lot like a Pokemon card or Magic the Gathering, or one of these kind of baseball cards or something like that. I used to use these when I was a kid, and these cards are valuable and exciting because they're rare. They have some digital, well, they have some scarcity, and they also have some authenticity, that they were created by official Pokemon or official whatever it is, right? So those two things give that NFT value in this case also. So the same way you open a pack of Pokemon cards, it's from official, and then you open it and there's that shiny rare Pokemon card. The same thing with NFTs. People get that kind of excitement, and on top of that, it's also digital, so it can be worked into the flow of games or anything online. And I think that at the moment it's really getting a lot of popularity. So it's taking a boom, and we at Transak, we're also seeing a lot of business customers who are wanting to integrate our services into NFTs and get those to a mainstream audience. So yeah, we're pretty excited about it as well. Yeah, I'll let Jack also say his.
Yeah, so I think Sami has brought a pretty good point about the utility of NFTs in games, and I think that was the primary utility for ever since NFT launched, with the whole CryptoKitties mania and everything. But I think the larger use case of NFTs is currently used in art and other sorts of one of a kind type of products, like a really rare car or really rare watch or something like that. But I think to bring that a bit further, I think the further use case of actual NFTs on the blockchain that actually has value that people would want to use is on options actually, or like insurance, like what Maxis Mutual has already done with their whole NFT game, because these things are extremely unique, right? You want a specific insurance on a product that is customized to a time frame that is within that is unique to every user. Because if, for example, I want to do a 30-day cover, right, for the Switcheo contract or something like that, and I want to get covered for maybe $5 million. This is a very unique contract because the time that the cover starts is based on when I send the transaction, I broadcast the transaction, and that's different from anyone else that has the same cover, because the time duration starts from a very unique period. So I think that's something that the NFTs really have a real utility case for, rather than just being tied directly to a product or a service or card or anything.
Yeah, thank you, man. So we're gonna take some questions from the community now. I'll just go through it. So Akshay has been asking, what are some? Okay, yeah, just give me a second, right? So yeah, very interesting question from Akshay. So what do you guys think is the most important development happening in DeFi in past 30 days or so, right?
I think it's Uniswap's token.
Yeah.
Actually, 30 days ago, I'm not sure if SushiSwap came out 30 days ago, but I think that's one of the most interesting developments out there. Because they kind of identify hey, Uniswap has all this liquidity, and we should find a way to pull this liquidity out of Uniswap and to create our own protocol. And the way to do so is to do a vampire attack, right? You incentivize the users to move the LP tokens, which actually has a migrate function to essentially pull all the liquidity from Uniswap onto their own swap exchange. I think that is genius. And the second one that I think is really, really interesting is actually Uniswap, because the launch of the Uni token basically pulled everybody back from Uniswap, from SushiSwap back to Uniswap, any of these different protocols back to the actual OG, right? Which is Uniswap in the first place. And the way that they distributed these tokens, it's fantastic, right? You force people to stake in not just the Uni. People don't even stake in the Uni pools. That they just stake in the pools that people trade the most, which is Ethereum versus stablecoin and Ethereum versus BTC. So currently, I think their strategy is really good because the liquidity on the stablecoin pairs and the BTC pairs are much more liquid than even centralized exchanges now, and I think that's perfect. Like I think that's a really good strategy that they employ. Yeah.
Nice. So the question to you, Sami, I think even I want to know that, right? When is the sell button coming to Transact? You can only buy right now.
Yeah. Actually, this is a question I'm getting a lot. And actually, just before this call, I did a call this morning where we were kicking off the development of it, and I'm also personally involved in development of this feature. So we're actually participating in the ETH Online hackathon at the moment, and we're going to be spending our weekends on this. So at the moment in Transak, we're really busy with like hiring and growing our team. So have to do this kind of work on the weekend, and yeah, we're developing it at the moment, and we're doing a smart contracts based approach. So what we're going to have is we're going to have this functionality where if you're a user or if you're an app developer, you can specify a smart contract address where a specific user can send their tokens, and before that they've connected their bank account, and whenever you send tokens to that address, it's going to be liquidated and fiat is going to be sent to your bank account. And this is going to be really, really huge. It's going to be a massive thing for the community, and I'm going to say a few use cases. So one use case is remittance. So you can buy a stable coin in one country, let's say UK or USA, and you can sell that stable coin in another country, let's say India, and now you're looking at a cross-border payment that's minutes instead of days, and commission is less than 1%, which is much better than the current FX market right now, which is crazy that we can do that. And another use case is you could set up this contract and you could, for example, be a company that's paying employees in cryptocurrency, but let's say one of your employees, they don't want cryptocurrency, they want to pay their bills and feed their family. So you would just send this crypto to their Transact smart contract instead, and it would get liquidated to fiat, and they can pay their bills and all that stuff. Another use case is this could be connected to an interest-bearing DeFi product, and when you're earning your interest at the end of the month, the smart contract can just send that and liquidate it. So we're going to be working hard on this over the next few weeks, and you can follow us. You can join our community on Telegram and Discord and just follow along, and we're really excited to get it out. I think it's gonna cause some waves.
Nice, thank you. I'm eagerly waiting for the same myself.
Okay.
Yeah. Another question is from Akshay. For me, where is my focus in DeFi right now? So yeah, basically I am like working for a product in staking derivative space, which will be essentially like, in proof of stake blockchains, there are currently it's over $15 billion worth of value, which is currently logged in proof of stake. And we are essentially trying to build a solution which will enable that liquidity to come to Ethereum and its ecosystem, and like as a staker, people will be able to earn much more reward than the proof of stake blockchain, proof of stake, and they'll be enjoying the liquidity as well, while like they can unlock their tokens anytime they want, they can sell their tokens anytime they want, they can use them for liquidity mining and earn additional reward like our native token, right? And to be like, if I explain this to basically a noob or someone in traditional finance, it's as simple as like, suppose you are holding a fixed deposit, or you're holding a holding some physical gold, and it's like totally, it's not like not totally liquid, right? You can sell it 24/7. What we are essentially doing is we are making your FD, a fixed deposit, like completely liquid. You can sell it 24/7 anytime you want, as well as you can hold it and earn additional APR. Like in FDs in India, there's an interest rate of around 6% right now. Right, and imagine like you enjoy the liquidity as well. Like you can sell them anytime you want, as well as you can earn additional 6% or 10% APR. So that's what we are working on, and I'm pretty excited about. Yeah. Maybe okay, we have got another question. I think this should be our last one before we wrap up. The question is this BitMEX fiasco, right? It was like a very what do you think like it's gonna impact the DeFi space? Whether it's gonna grow? Because yeah, we all should agree like centralized exchanges are definitely risky, right? Like they can get hacked, or the founders get jailed, just like what recently happened with BitMEX, or get arrested, right? What do you guys think about it? I would love to know both of your perspective, starting with that, Jack.
Yeah, we're actually working on our own derivatives exchange as well. It's called DMAX. I think some of the our community members have had a chance to play with our beta app quite recently, and we'll be launching in a couple of weeks. It's kind of our answer to all these different issues with jurisdictions and legality behind derivatives exchanges and all these types of clampdowns. Like we've seen issues with Binance and the Chinese government. I think over the past couple of years already, and it's quite apparent that you know, as the jurisdictions kind of creep in on the space, because it's kind of growing really fast, and it's quite uncertain for a lot of the governments. When they're uncertain with the technology that's coming out, they will kind of want to control it and try to prevent people from utilizing all these platforms. But our goal to that is kind of our end goal is kind of to run the whole exchange through a DAO, and to really go through the decentralized route where every component of the exchange is decentralized, and you know, new pairs are being voted on based on some sort of governance model, and have it truly run on IPFS and through our validate and all matching through our validator nodes and everything, like, you know, just not owned by anybody basically, and just owned by token holders. Yeah, I think that's the answer to the whole BitMEX fiasco. Yeah.
Yeah. What do you think about it, Sami?
Yeah, so I think that, you know, what happened with BitMEX is you know, it's a clamping down of regulation, and I think regulation is there for a reason. And you know, I think it's regulation. If it's done well, it's you know, it's very good for the world, and if it's done badly, it can really hamper innovation and cause problems. And so I would say that regulators really need to kind of educate themselves about the space and learn how to work with the industry, because, you know, there are a lot of really good people in the industry, but there's also a lot of bad people who you know, don't operate in a good way. So I would say that the good regulation is really important there. And you know, I think, you know, another important thing there is you know, centralized exchanges do have these issues, obviously, that aren't present on decentralized exchanges. And yeah, I think that when you use something like that, then you obviously have to be conscious of the fact that your money is locked up by someone who you are trusting, and that person that you're trusting may not deserve that trust. One more thing about BitMEX specifically is this derivatives market is a very interesting market, because the value of a customer to the company there is very high. Like all of these trades that customers are making are highly leveraged. So I think that this is going to be a really exciting space to watch over the next few years. I have actually some friends of mine are about to launch a new derivatives exchange called GlobalDX. They're backed by Pantera, and I'm really looking forward to seeing. Like, I think it's kind of good timing for them. This stuff. I'm looking forward to seeing how they do in the market, and hopefully they can pick up the pieces.
Thanks, Sami. So we have a last question. We are already running out of time. I'm not sure we should cover it. Okay, we can quickly cover it maybe for a minute. Yeah.
Yeah, we can have this question. Last question.
Yeah. Okay. Last question is: anyone currently working on NFT, especially in the gaming industry? Yeah. Myself, I know. Yeah, there are a lot of companies. Even Atari, like the gaming OG Atari has came to gaming recently. I saw Sandbox is building one, right? I think this question should be to Sami. Like, do you know any good, more like OG companies, gaming companies coming to NFTs?
OG companies. So we have a few exciting customer partnerships that we're going to be announcing over the next few weeks. I can't say exactly who they are just yet, but all of the gaming companies that we've spoken to so far have been, not OG. So I'm sure there is stuff going on in that space, in the OG space, but I don't have any like particular insider knowledge there. I'm sorry to say, but one thing I would say is that we're seeing a big trend in these companies who are going towards layer 2. So Transak, we just shipped a direct integration with Matic Network for layer 2, and this is really crazy popular with the gaming sector, because you need to have instant transaction times. You need to have like low gas fees because the number of transactions is much more. So I would say that's the big trend in that space. As for OG companies, that's a really interesting question. I think it will happen, but I don't have any specific knowledge there, unfortunately.
Thank you so much to you, both of you guys. It was a great session, right? It was nice talking to you guys. Yeah, over to you, Manav.
Thank you, Prateek,
having us.
Sami, and Jack, for such a lovely session, and some really insightful, points regarding DeFi and the products that can go about. So I did a quick poll that how many of you guys are looking at building a DeFi product. So got a 75% yes. So I hope now after this particular event, we will be seeing a lot more products in the DeFi place coming in from India. All right, guys, thank you. And we'll be now moving on to our third session. Thank you.
Yeah, thank you.
Yeah, thank you.
And just one more thing I wanted to say is that we are hiring at the moment. So if there's anyone in the audience, we're hiring for a bunch of roles: engineering, finance, operations. So I'll leave the details in the chat, and please come speak to me.
Perfect. Please, guys, do apply. Transak is a brilliant company. So you will get to learn a lot with the team, and the founders are amazing. So don't miss out on the opportunity. Thank you.
Thanks.
Thank you, guys.